What if I told you that you could be leaving money on the table by ignoring some of Warren Buffett's top stock picks? That's right, the Oracle of Omaha, the guy who turned a few $1,000s into billions, has a knack for picking winners. And today, I'm breaking down 4 of his hottest holdings. These are 4 Warren Buffett stocks you need to buy now after Berkshire Hathaway's latest 13F filing. We're diving deep into a powerhouse in the financial sector, a beverage industry leader poised for explosive growth, a food industry giant with strategic dominance, and an energy sector player shaping the future. These aren't just random companies, these are Buffett-approved investments with massive potential. If you only watch one video today, make sure you watch this one, all the way till the end. We're about to unlock serious value, and potentially set you on the path to financial freedom. Hit the like button, let's get 1,000 likes on this one, share the video and leave your thoughts in the comments, and subscribe so you don't miss out on the next important financial investing update. Now, before we dive in deeper into today's list, I want to let you in on a little secret that could completely transform how you invest and grow your wealth. This video is sponsored by Forecaster Terminal, a tool I've been using to uncover these incredible stocks, and honestly it's been a game changer for my research. This software, powered by the Forecaster AI agent, uses cutting-edge artificial intelligence to analyze all financial instruments, whether it's stocks, ETFs, cryptos, indexes, forex, and even commodities. It's like having your own expert financial analyst working around the clock to give you the most accurate insights and uncover new opportunities. With Forecaster, I can quickly identify value stocks, growth stocks that are ready to break out, and even spot seasonal trends in the market that most investors overlook. I can spot insider transactions in seconds. The political tool tells you when politicians are buying or selling shares in a company. If you're serious about investing, this is the tool that can completely transform your portfolio. It's designed to help you find opportunities, reduce risks, and make smarter decisions that could grow your wealth faster than you thought possible. So, if you're ready to take your investing game to the next level, click the link in the description now to try Forecaster Terminal for free, and use my code GALORE10 to get a 10% discount when you sign up. Don't miss out on this game changer for your portfolio. First up, we're talking about Ally Financial, ticker symbol ALLY. This company has been making waves in the financial sector, and it's time we dive deep into what makes them stand out. Now, you might not think of banks as the most exciting investment, especially when compared to tech giants or innovative startups. But trust me on this one. Ally Financial is different, and here's why. Ally is not your average brick-and-mortar bank. They have redefined what it means to be a financial institution in the 21st century. They're an online-only financial powerhouse, leveraging technology to provide superior services to their customers, and they're absolutely crushing it in the digital age. Their innovative approach has set them apart from traditional banks. Think about it. No expensive branches to maintain, lower overhead costs, and the ability to pass those savings on to their customers. And a laser focus on technology and customer experience. This combination has allowed them to build a loyal customer base. That's Ally's recipe for success. They understand the modern consumer and have tailored their services to meet those needs. And guess what? Warren Buffett loves it. The Oracle of Omaha himself has seen the potential in Ally Financial. He's been steadily increasing his stake in Ally, and for good reason. Buffett's endorsement is a strong signal of the company's value. Ally is a leader in auto lending, a sector that continues to grow as more people finance their vehicle purchases, a market that's only getting bigger. With the rise of electric vehicles and the need for flexible financing options, Ally is well positioned. Plus, they're expanding into other areas like mortgages, personal loans, and even investing. This diversification strategy is key. This diversification makes them less reliant on any one market and spreads their risk across multiple revenue streams and positions them for long-term growth. By not putting all their eggs in one basket, Ally ensures stability and potential for expansion. But here's the kicker. Ally is undervalued. Despite their impressive performance, the market hasn't fully recognized their potential. Yes, you heard that right. This presents a unique opportunity for investors who can see beyond the current market sentiment. With a market cap of $11.88 billion, Ally is showing an earnings per share of $2.61 and a price-to-earnings ratio of 14.91. Their revenue was $14.22 billion in 2024, with a net income of $668 million. On top of that, they offer a solid dividend yield of 3.08%. However, if we compare their current price of $38.91 to our forecaster fair value price of $50.35, it's clear that the stock is trading 29.42% below fair value, which could indicate an opportunity for potential growth. Even with their impressive performance and growth potential, the market hasn't fully caught on to Ally's true value. This is where savvy investors can step in and capitalize on the opportunity. Recognizing undervalued assets is key to building wealth. Remember, Buffett is known for buying great companies at a discount, and Ally fits the bill perfectly. And 𝗟𝗨𝗦 fits the bill perfectly. They're profitable, they're growing, and they have a clear vision for the future. And they're led by a strong management team. Leadership is crucial, and 𝗟𝗨𝗦's team has proven their capability. What more could you ask for? A company with strong fundamentals, growth potential, and a strategic vision. Now I know what you're thinking. What about the interest rate hikes? Won't that hurt 𝗟𝗨𝗦? It's a valid concern. And it's true, higher interest rates can impact lenders, but 𝗟𝗨𝗦 has strategies in place to mitigate these risks. But here's the thing. 𝗟𝗨𝗦 is well positioned to weather the storm. Their risk management practices are top-notch. They've got a strong track record of managing risk, ensuring they can navigate through economic fluctuations. And their online-only model gives them a competitive edge in terms of cost efficiency. Lower costs mean they can offer better rates. Plus, as rates rise, 𝗟𝗨𝗦 can actually benefit from higher interest income on their loans. It's a balancing act they manage well. So the bottom line is this. 𝗟𝗨𝗦 Financial is a solid, long-term investment with the potential for significant upside. Their strategy is sound. They're a leader in a growing market, they're financially sound, and they have a clear path to continued success. And they're backed by the Oracle of Omaha himself. Buffett's confidence in 𝗟𝗨𝗦 speaks volumes about their potential. That's a winning combination in my book. 𝗟𝗨𝗦 Financial is a company worth watching and investing in for the long haul. Next up, let's raise a glass to Constellation Brands, ticker symbol STZ. This beverage giant is a powerhouse in the alcoholic beverage industry, with a portfolio of iconic brands that you know and love. Think Corona, Modelo, Robert Mondavi wines. These are just a few of the names in Constellation's impressive lineup. Now you might be thinking, alcohol? Really, Graham? But hear me out. Constellation Brands is strategically positioned to capitalize on several key trends in the market. First, premiumization. Consumers are increasingly trading up to higher quality, more expensive alcoholic beverages, and Constellation's portfolio is perfectly aligned with this trend. They're focused on premium brands that command higher margins and drive strong customer loyalty. Second, the rise of e-commerce. Constellation is investing heavily in its digital capabilities, making it easier than ever for consumers to purchase their favorite drinks online. This is a smart move, as online alcohol sales are expected to continue growing rapidly in the coming years. And third, Constellation is tapping into the booming cannabis market. They've made a significant investment in Canopy Growth, a leading cannabis company, positioning themselves to capitalize on the long-term growth potential of this emerging industry. Now, I know some investors might be hesitant about investing in alcohol, especially with the rise of health consciousness. But here's the thing. Constellation is diversifying its portfolio to include healthier options, such as hard seltzers and low-calorie wines. They're also focused on promoting responsible consumption and addressing concerns about underage drinking. So they're not just ignoring these trends, they're actively adapting and evolving to stay ahead of the curve. And let's not forget about Warren Buffett's seal of approval. He's been a long-time investor in Constellation Brands, and his continued confidence speaks volumes about the company's long-term prospects. Constellation Brands has a market cap of $31.07 billion and an EPS of $3.76, with a PE ratio sitting at 45.70. The company is expected to generate $9.96 billion in revenue for 2024, alongside a net income of $1.73 billion. The dividend yield is 2.35%, but when we look at their current price of $171.82, it's trading 25.69% below their discounted cash flow value of $231.22. That might suggest a discount on this stock relative to its true value. Now let's talk about a company that needs no introduction. Kraft Heinz, ticker symbol KHC. This food industry giant is a household name with a portfolio of iconic brands that have been staples in pantries around the world for generations. We're talking Kraft cheese, Heinz ketchup, Oscar Mayer, Philadelphia cream cheese. The list goes on and on. These brands are not just products, they are part of our daily lives, evoking a sense of nostalgia and trust. Now I know what you're thinking. Kraft Heinz, isn't that like your grandma's stock? A relic of the past? And it's true, Kraft Heinz isn't exactly a flashy high-growth tech company. It's not the kind of stock that makes headlines for skyrocketing share prices overnight. But that's precisely why Warren Buffett loves it. The Oracle of Omaha has always been a fan of companies that offer steady, reliable returns. See, Buffett is all about value investing. He seeks out companies that are undervalued by the market but have strong fundamentals. He looks for companies with strong fundamentals, a durable competitive advantage, and a track record of profitability. Companies that can weather economic storms and come out stronger on the other side. And Kraft Heinz checks all those boxes. They have a massive global footprint, a portfolio of beloved brands with incredible pricing power, and a history of generating consistent cash flow. They have a massive global footprint, a portfolio of beloved brands with incredible pricing power and a history of generating consistent cash flow. Their products are found in nearly every grocery store, and their brand recognition is second to none. Plus, they're undergoing a major transformation to streamline their operations, reduce costs, and drive future growth. This isn't just about cutting expenses, it's about making the company more agile and responsive to market changes. Now, it's no secret that Kraft Heinz has faced some challenges in recent years. The food industry is highly competitive, and consumer preferences are constantly evolving. Changing consumer preferences, increased competition, and the pandemic have all taken their toll. These factors have forced Kraft Heinz to rethink their strategies and adapt to a new market reality. But here's the thing, they're actively addressing these challenges head-on. They're not sitting back and hoping for the best, they're taking decisive action. They're investing in innovation, developing new products that cater to evolving consumer tastes, and expanding into faster-growing categories like plant-based foods. This is a company that understands the importance of staying relevant. They're also leveraging their global scale to drive efficiency and reduce costs. By optimizing their supply chain and improving operational efficiency, they're positioning themselves for long-term success. And let's not forget about the power of their brands. Kraft Heinz has some of the most recognizable and trusted brands in the world. These brands are a testament to the company's ability to create products that resonate with consumers. Kraft Heinz has some of the most recognizable and trusted brands in the world. These brands have stood the test of time and they continue to resonate with consumers across generations. From the classic taste of Heinz ketchup to the creamy goodness of Philadelphia cream cheese, these products are beloved by millions. With a market cap of $36 billion, Kraft Heinz shows an EPS of $2.27, and their PE ratio is 13.25. They're expecting revenue of $25.85 billion in 2024 and a net income of $2.74 billion. Their dividend yield is particularly attractive at 5.31%. But what's really eye-catching is that their current price of $30.14 is 71.60% below our forecaster fair value price of $51.72, suggesting a major disconnect from its potential value. So, while Kraft Heinz might not be the sexiest stock in the market, it's a solid, value-oriented investment with the potential for long-term growth. It's a stock that offers stability and reliability, qualities that are often overlooked in today's fast-paced market. They're a classic for a reason, and their turnaround story is just beginning. With a renewed focus on innovation and efficiency, Kraft Heinz is poised to write the next chapter in its storied history. Last but not least, let's talk about Occidental Petroleum, ticker symbol OXY. This company has been a significant player in the energy sector for decades, and it continues to evolve with the times. Now, I know what you're thinking. Oil? Isn't that like so 20th century? Well, it's a bit more complicated than that. And it's true, the energy sector has faced its fair share of challenges in recent years, with the rise of renewable energy and the push for a greener future. The landscape is changing, but that doesn't mean oil is obsolete. But here's the thing, oil and gas aren't going away anytime soon. Despite the growth of renewables, fossil fuels still play a crucial role in our energy mix. They're still essential components of the global economy, and they're going to be for decades to come. From powering industries to fueling transportation, oil and gas are deeply integrated into our daily lives, and Occidental Petroleum is well positioned to capitalize on this continued demand. Their strategic investments in operational efficiency make them a formidable player in the industry. They're one of the largest oil producers in the United States, with significant operations in the Permian Basin, one of the most prolific oil fields in the world. This gives them a substantial advantage in terms of production capacity and resource availability. They're also a major player in the chemicals industry, producing a wide range of products that are used in everything from plastics to fertilizers. This diversification helps stabilize their revenue streams and reduces dependency on oil prices alone. Now, I know what you're thinking, but what about the transition to renewable energy? Won't that hurt Occidental? It's a valid concern, but let's delve deeper. And it's true, the world is moving towards cleaner sources of energy. The shift is undeniable and it's gaining momentum every year. But here's the thing, Occidental is adapting. They're not just sitting back and watching the world change, they're actively participating in the transition. They're investing heavily in carbon capture and storage technologies which could significantly reduce the environmental impact of oil and gas production. This technology captures CO2 emissions and stores them underground, helping to mitigate climate change. They're also exploring opportunities in renewable energy, such as wind and solar power. By diversifying their energy portfolio, they're positioning themselves for a sustainable future. And let's not forget about Warren Buffett's massive investment in Occidental. When one of the world's most renowned investors puts his money into a company, it's worth paying attention. He's been buying up shares hand over fist, and he now owns a significant stake in the company. This vote of confidence speaks volumes about Occidental's potential. Clearly, he sees something special in Occidental's long-term prospects. His investment strategy often focuses on companies with strong fundamentals and growth potential. We have Occidental Petroleum with a market cap of $49.06 billion, an EPS of $2.63, and a PE ratio of 19.88. Revenue for 2024 stands at $26.73 billion, with net income hitting $2.38 billion. The dividend yield here is 1.68%. Looking at their current price of $52.30, it's trading 56.20% below our forecaster fair value price of $81.69, which could signal a significant gap that investors might want to consider. So, if you're looking for a value play in the energy sector, Occidental Petroleum is definitely worth considering. Their blend of traditional energy production and forward-thinking investments makes them a unique player in the market. They're a well-established company with a strong track record, they're adapting to the changing energy landscape, and they have the backing of one of the greatest investors of all time. This combination of factors makes Occidental Petroleum a compelling addition to any investment portfolio. There you have it, 4 Warren Buffett stocks that could take your portfolio to the next level. Remember, these are just a starting point. Do your own research, consider your risk tolerance, and invest accordingly. If you want to know my secret for finding winning stocks, it's Forecaster, the ultimate tool for uncovering high-value investments. Try it for free today. Just click the link in the description with my code Galore10 for an exclusive 10% discount. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. As always, thanks for watching. Hit that like button if you found this video helpful, share your thoughts in the comments below, and subscribe to the channel so you don't miss out on the next video where we uncover more stock market secrets.